Good afternoon, sir.
Good afternoon. Good afternoon. Thank you very much.
Happy New Year, sir.
Happy New Year too. So ratio analysis, today we will work together students and we will identify the reasoning of the numbers as well. Okay, so initially I told you we need to do the growth analysis. That means you need to compare from 2020 to 2021, the reason for the change in the growth. So students, I believe it's always better to have a calculator with you because we can work the question together and we will do this only for today students. That's fine. Let's do only this for today. Okay. So let's start working students. So 2 decimal places is our general target. So let's see, 5 have come already. Okay. So cost of sales. So it's not difficult. 32,515, that is the current cost of sales, minus 28,970, and that I'm going to divide it by, again, by 28,970. So that students, I will be able to get the correct answer if I multiply it by 100. So let's start doing this first, students. After that, we can have, because the reasoning, you need to know the case study properly, students, because according to the case only, we are doing the reason. Okay. So 32,515, 28,970, 28,970 multiplied by 100. I'm not putting that multiplication. So if you do that, students, I believe here you should get something around 12.24 percentage. Students, can you confirm me whether you are getting this as an answer? 12.24 percentage. Again, there's an increase in the cost of sales as well. So students, now if you see why the cost of sales has increased, we need to do a practical reasoning. So if you see, students, suppliers are situated. Now suppliers are situated in two regions. One is, I think it's North America, if I'm not mistaken, students, South America or North America. One is in the North America. I'll take you to that page as well. And if you see, this page is very important, students, where they have given about the supply chain relationship. So one is, if I'm not mistaken, it's from South America. Sorry, it's from South America. One is from the South America. So get that application properly, students. One is from the South America region. And if you see some other countries, if you generally observe, they are coming from which place, students? One is from Asia, if I'm not mistaken. Asia is also, they have mentioned at the moment. So get this understanding properly, students. It is very important. So this will be one reasoning for the cost of sales increase. And also, students, one more thing, students, if you see, Kalen is a developed country. Kalen is a developed country. So just remember one thing, developed country, the wages may be little higher, students. Wages may be higher because students, they have rules and regulation, everything. So the cost of sales may be little higher. So it has gone by 12.24 at the moment. Further, they could have considered other, I can say, overheads means fixed cost. Example, I can generally say, students, own distribution vehicles. They do have own distribution vehicles, so they need to have that maintenance cost, everything. So that is the basic point of that, students, at the moment. So before moving forward, students, any questions on the cost of sales, you can ask me. But I believe this is fine, students. Get this understanding very properly. It's increase. Increase means going up. So if you are fine with that cost of sales, can I quickly get a Y in the chat box, students, so that we can go ahead with the gross profit and the other factors as well. Thank you very much. So coming to the gross profit, students, if you observe 35,225 minus 30,150 multiplied by 100. So let's work on the gross profit as well. It's not so complicated, students. Let's do the change in the gross profit. So I need to divide it by 30,150, sorry, 30,150 into 100. So let's work on that, students. So it's going to be 35,225, 30,150, 30,150. So the effective answer that you're going to give here is 16.83 percentage, 16.83 percentage. So once again, students, the gross profit also has increased. The gross profit also has increased. So the main reason why the gross profit has increased, one is online sales are increasing, students. Online sales are increasing. Now, students, if you see online sales increasing means the overheads are less. Overheads are less. I'll tell you why. Because no need to pay, no need to pay salary for, no need to pay salary for salesman, everything. It goes directly to the people. So it's very easier in that as well. And another thing is I can say here is like the the stylish shoes, what they have produced, would have created a viral effect. That means people love to buy that stylish shoe. So I can say trend effect. In simple language, we can say as trend effect. So that is the reason again why the gross profit margin would have gone up. So students, coming to the next one, selling distribution change. Let's do that analysis as well. And marketing cost, selling, distribution, and marketing cost. So students, if you observe here, 23,053, 23,053, and here it's 21,585. And what we are going to do, we are going to divide it by 21,585 multiplied by 100. So let's do the analysis for these students. It's not difficult. 23,053, 21,585, 21,585. So effectively here, I think you will be getting an answer of 6.80. If I'm not mistaken, it is 6.80 percentage. So there is a slight increase in the selling, distribution, and the marketing cost. Slight increase only. The main thing I can specifically say is the new stores would have incurred digital monitor cost. There is a digital monitor, if I'm not mistaken, monitor cost. Further, we need to understand. Further, we need to understand the application. Further, we need to understand the application of gate analysis. Students, can you remember there is something called gate analysis? That means when you enter a showroom, there is a treadmill type of thing where the consumers, the buyers, can use the shoes inside the treadmill and see the quality, whether it is fine with them, their running pattern, everything. So understand the application of the gate analysis where the consumers may request in the future, where the cost can go up, there is high chances on that as well, students. A digital marketing, all I can write down. So I'll write down here, there can be digital marketing cost as well, digital marketing cost also there. So I believe that is fine there. So that is how, students, you need to do the reasoning part. The reasoning should be analysis to the business situation only. So coming to the next one, students, let's work on the administration cost. So if you see the administration cost, what I can say is it is 6,100 minus 5,440 divided by 5,440 into 100. So shall we do that? Yes, we can do that, students. 6,100 minus 5,440 divided by 5440 multiplied by 100. So students, you can get the answer that may be 12.13 percentage if I'm not mistaken. Maybe it is 12.13 percentage. Thank you very much. So it is 12.13 percentage on the change. So I can specifically say is the new stores may have some new divisional managers, because when you are opening new stores in another 6 region, divisional managers where the salary may go up, where the salary may go up. So that is administration cost. Further, there can be product development cost, because here they consider product development as an administration. It is there in the note, product development cost, which may be incurred, which may be incurred in the research and development. So that is again one more factor to keep in mind. So I believe administration function is also clear. So you need to be very specific here, students. Look at the reasoning, what we are doing. We are doing all the reasoning critically to the business application only. So coming to the next one, students, it's going to be the operating profit, if I'm not mistaken. So let's do the operating profit change as well. That is 6072 minus 3125 divided by 3125 into 100. So students, if you do not mind, we can finish this off as well. It's not a difficult one. It's just a basic one. So let's do that, students. 6072 minus 3125 divided by 3125 multiplied by 100. So the answer at the moment in operational profit increment is 94.3%, if I'm not mistaken. Correct me if my interpretation is wrong. So it's coming closer to 94.3%, I think 94.30. So students, it's in the 90s range. Even if there's a rounding error, that's fine. So it's in the 90s range, students. So get this application very much clearly for your answer, because this is important. Now, students, if you see, almost it's a double change in the impact if you see operationally. So I can generally say here the efficiency level, the efficiency level, the efficiency level, the efficiency level, the efficiency level in the cost management, in the cost management, in the cost management, in the cost management has been successful, has been successful. We specifically say as cost transformation, cost transformation. Now, students, if you see this online classes, what we are having is a cost transformation, because earlier, students, if I want to come to UP, that is Mathura, and do a class, I need to take a flight. From Delhi, I need to take another transportation and come to the college. But if you see at the moment, students, the efficiency level in the cost of the management has been very high. So get that understanding properly. Therefore, we have achieved a better operational profit. We have achieved a better operational profit, which is high, and it's good as well, Further, the expansion across Europe, expansion across what, students? Expansion across what, students? Europe also has made a bigger change here. So students, any questions you have in this, you can ask me. But if your operating profit is also fine, we can go to the finance cost. Now, finance cost, students, is again, if you see the finance cost, how much? 390 minus 390. So the change is 0. So if you effectively see, again, there is 0 change. So the percentage of change is 0%. So I can write down here, there may be a long-term finance, where the interest is fixed, interest is fixed at the moment. Are you clear with that, students? That means they are currently would have had a loan, and that interest rate in that loan would have been fixed for the time moment. So any questions in this, you can ask me, students, on this application. If you are fine with this, students, can I quickly get a Y in the chat box, students? If you are fine with this, can I quickly get a Y in the chat box, students? Thank you very much. Thank you very much, students. Thank you very much, students. So I believe this is giving you a better clarity and a picture across this. So coming to the next one, students, that is going to be the profit before tax, profit before the tax. So let's do the working of that as well. So it's going to be 5,682 minus 2735. And what I need to do is, students, I will be able to divide it by 2735 and multiply it by 100. So let's see what's happening. So 5682 minus 2735 minus 2735, it's going to give me an answer of 107.75%. Correct me if I'm wrong, students. Is it 107.75%? Do you see a incrementation of double, students? So the profit before tax has gone by double. So I can generally see this company is currently having an exponential growth. Is having an exponential growth. Exponential growth means, students, a growth which is more than what is expected. Exponential growth. Therefore, potential issues, managing operating systems. Now, students, if you see, operating system means not Windows or anything. Operating system means your business process. Example, warehouse management. Now, these all can come in the future. Warehouse management, because you need to have stocks. Sometimes there can be a scenario you may lose the stocks also. So get that application properly. And then you have something called income tax expense. So let's complete that as well on the income tax expense. So that's going to be 1,620 minus 805. That I'm going to divide it by 805 into 100. So let's work on that, students. 1,620 minus 805 divided by 805. So the answer here is going to be 101.24 percentage, if I'm not mistaken. So again, students, you need to get the understanding. Income tax anyway has a correlation with the, I can say, profit. When profit increases, tax may increase. So I'll write down here. Generally, this is a general technical rule. Generally, when the profit increases, the taxation may also increase. The taxation may also, what, students, may also increase, which has been provided, which has been presented above. So get that understanding. 100% and 7%. So slight difference, but still I agree with that. So the next one, what we are going to do is profit for the year. So let's work on the, students. That is 4,062 minus 1,930 divided by 1,930 into 100. So shall we work on that? Yes, we can work on that. 4,062, 1,930, 1,930. So effectively, this is going to give you an answer of 110.47 percentage. So again, what we can clearly observe is it's an exponential growth. So I'll write down here. Cushy is performing well in the segment. What is the segment? That is specialized athletic shoes. Because here it is 100% natural material. Specialized athletic shoes, where the growth is faster. Where the growth is faster. And there can be situations of working capital management issues, in the future, because sometimes students, we don't know whether it is a actual credit sales or cash sales, because cash flows plays a major role, because sometimes you would have done most of your transaction on the credit perspective. So that may be the issue in that aspect, students. So I just want to ask you a question, students. The growth analysis we are done. So if you did not understand the reasoning of anything, I'm giving you time. You can ask me any questions you like before we go forward. If you do not have any questions to be asked, what you can do is, students, you can put a Y in the chat box if you do not have any questions. If you do have questions, please ask the question. Students, please be interactive. You need to put the Y whenever I request. The meaning of that is you are involving in the class. The main reason I'm asking you to get involved in the class, so that students, it will be having a transparency between everyone. Thank you very much, students. Thank you very much for your time. So students, before we go into the ratio analysis, I think the next area is ratio analysis. What we can do is, students, we can go for a 5 minutes break. We can go for a 5 minutes break, students. You can take a break. You can just do some stretching, walking around. So after the 5 minutes break, we can continue with the ratio analysis. Thank you, students. Okay, students, so I'm back to the class. Can I quickly get a Y in the chat box, students, if you can hear my voice? Thank you very much, students. Thank you very much. Thank you very much. So students, coming to the application now, let's start working on the ratio analysis and do the critical reasoning for our business actually. So students, revenue, that is gross profit margin we did yesterday. So let's work with the operating profit margin. So I'll write down here operating profit margin. When you see margin verb, that is selling price. Okay, students, markup means cost of sales. So the formula is very simple, students. Operating profit divided by sales into 100. So shall we work on the operating profit margin? Yes. So students, if you see the operating profit is 6072, I believe that is very clear for the class. 6072, which is in the bold, divided by 35, divided by the sales, which is 67,740, and I'm multiplying that by 100. So let's see what is the answer that we are getting, students. That is 6072 divided by 67,740 multiplied by 100. So you can do the mathematics, students. That is very simple. 6072 divided by 67,740. So I think it is giving you an answer of 8.97. Students, are you getting something closer to 8.96? Sorry, it's 8.96, students, if I'm not mistaken. Are you getting something closer to 8.96? So if you see the meaning gross profit means of your sales, how much you keep it as a profit for the company. So students, if the sales is 100 means 50 is profit in that. That is the idea here. So operating profit 100 means of that 100, 8 belongs to the operating profit. So coming to the next one, students, so that you will get the application of that even more better. So it's going to be 3,125, that divided by the sales 6,740 multiplied by 100. So students, shall we work on that? 3,125 divided by divided by, please excuse me, it should be 59. That is the 59,120, which is the sales figure. So let's calculate and see, students, what is the answer you get. So 59,120. So the answer you need to get here is 5.29, if I'm not mistaken. So I'll write down here, students, 5.29 percentage. 5.29 percentage. Thank you very much, students. Now, students, if you see the operational profit, if you observe, has completely increased compared to the last year. So I can justify the students development of mobile app. Development of mobile app would have made the process more simple, where the customer complaints, queries, there can be queries also, no, students, can be minimized. Now if you see, students, when you were small, when you book a taxi or a cab, they will ask you so many questions, how many kilometer, everything. But thanks to the technology, Uber has made it even simple. So operationally, students, we are growing. If you see, operationally, we are doing very, very well compared to the previous year. So let's do the next calculation, that is profit before the tax margin. Again, students, when you see the verb margin, just remember it is sales. So I'll write down PBT, a short term for profit before tax, divided by sales multiplied by 100. So students, if you observe, 5,682 is the profit before you paid the tax, divided by 67,740 multiplied by 100. So shall we finish on that? Yes, 5,682, 67740 multiplied by 100. So the effective answer you may get here is 8.39 percentage. 8.39 percentage. And students, if you do not mind, let's do it for the next year. 2735 divided by 59120 into 100. So let's do that, students, once again. That is 2735 divided by 59120 into 100. So the margins here, in this case, I think that is 4.63 percentage, if I'm not mistaken. So students, again, the main reason I can specifically say is no additional borrowing, because students, interest is remaining the same. No, students, no additional borrowing, no additional borrowing, because the interest is same, interest is same. Where the profits have increased, where the profits have increased, where what has happened, students, the profits have increased, the profits have what, students, increased. Students, are you getting the application of this properly, students? From 8.39, 4.63, 8.39, do you get the application there, students? Because students, get that understanding very properly, students, because that is very important here. They will not ask you. Nowadays, all these things can be done in Microsoft Excel. You can automate these things. But still, the red color ink is the human activity, because computers can't do the thinking till now, but future, yes, they could be done as well. So students, the next thing what we can do is profit for the year margin, profit for the year margin, profit for the year margin. That is, students, if you see net profit margin, we say. So I'll write down here net profit divided by sales multiplied by 100. So students, net profit 4062 and the sales is 67,740 into 100. And if you see for the next year, it's 1930 divided by 59,120 into 100. So shall we start doing the application of this? Yes, we can start doing of this. 4062 divided by 67,740. So it's going to be 5.99%. So can I make it to be precise? I can go for the net profit margin as 6%, students, because it's going at 99, if I'm not mistaken. And if you come for the next one, students, that is 1930. So 1930 divided by 59,120 into 100. So shall we complete that as well? So that should give you somewhere around, if I am not mistaken, 3.26, if I'm not mistaken, students, 3.26 for your answers. So students, I believe that has given a better understanding. Thank you very much, students. So shall we do the application point of view? Yes, we can do that. Similarly, same justification applies, same justification applies, same justification applies, justification applies, same justification applies. So students, effectively, when as a conclusion of these margins, what have happened at the moment, the effective conclusion, because we are done with the profits, no, students, profit margins have been done successfully. So students, effectively, what I can say, I'll write down with a different color pen. So effectively, I'll write down here, students, effectively, the rationale for the growth, rationale for the growth can be concluded, can be what, students, concluded, can be concluded as the company is having a digital strategy, where they have targeted the segment, using mobile apps, online stores, and further, they would have had, big data analytics, Students, do you agree with that, students? Yes or no? Because big data analytics plays a major role in this case. So that is the main reason, students, the efficiency has increased. Because when you were small, the data research is done manually. It's very hard. But now, students, it can be done using the website, everything. So we are done with the profit ratios at the moment. These are the profit ratios what we have done. So before we move forward, students, any other questions you have, you can ask me, students. But if you're fine with the profit ratios, can I quickly get a Y in the chat box, students? If you're fine with the profit ratios, can I quickly get a Y in the chat box, students? Thank you very much, students. Thank you very much. So the next one is we are going to do a small difference called return on capital employed. Students, you don't panic, students, because these are just in numbers. So anyway, I will give you a basic guidance of this, but the red color is more important than everything. So return on capital employed is operating profit. Okay, students, we take the operating profit divided by equity, that means the owner's money contribution plus the debt. Because if you see capital employed means money funded to the business. Capital employed means money funded to the business. Now in this case, students, you get the understanding very clearly that some companies are funded by debt and equity. So that is the understanding here. So operating profit means before you pay interest, because interest means if you pay for the debt providers. Now before you pay interest, what return these people gets? So investors can be a debt investor, investor can be an equity investor. So debt investor gives loan to the business, equity investors invest in the shares of the business. Students, any question on that explanation you can ask me. If you're fine with that explanation, can I quickly get a Y in the chat box? Any questions, students? Again, students, I'm telling, first step in our class is you need to be comfortable. Again, students, you are university students. You need to be comfortable. That is the first step in our class. Again, if you had observed, I sent you all direct messages. First thing that I want everyone to be connected within the sector. This is very important. So thank you very much, students. Now, students, let's come to the application here. So if you see operating profit here is 6,072, and students, that is very clear. Now let's look at the equity. So I need to go to the statement of financial position, students. So if you see the equity here, 9,288, I believe that is the total amount. And students, you have borrowing and lease. So let's go with the long term. So I am taking the lease also into consideration because you may use the lease vehicle in your business for your day-to-day operations. So students, what we will do is let's calculate this. Ready, students? 6,072 divided by 9,288, which is the equity contribution, plus 5,142, which is the debt contribution, multiplied by 100. This should effectively give you an answer of 42.08%. Students, are you effectively getting an answer of 42.08%? Can you just confirm me whether it is fine for you, students? Yes or no? Thank you, students. Other children also, if possible, can I get a Y in the chat box, students? If you feel I am fast, please let me know. But the thing is, students, since we are used to the class, this speed is good, students. I feel this speed is better, students. Frankly speaking, this is a very good speed that we are doing. Not very fast, not very slow. I feel this is the standard speed. So students, try to get adapted to this, and you can tell me anything you like whenever you want. Thank you, students. So students, let's do the next year one. You can do with me, students. So let's do the operating profit. Now, students, I'm taking it from here. Operating profit, I can easily take it. So it's going to be 3,125 divided by, students, the total equity, that is going to be 7,226 plus, if I'm not mistaken, it's going to be 5,033 multiplied by 100. So students, shall we work on that? Yes, 3,125, 7,226, 3,125, 7,226 plus 5,033. So students, are you getting a capital employed in this case, the return on capital employed of 25.49%, students? Can you please confirm me whether is this a capital employed that you are getting at the moment? 42.08, 25.49. Are you effectively getting something closer to 25.49%? Can I get a confirmation from your side, students, whether it is correct or not correct? Correct, right? So students, you see from 25, it has gone to 49. So one thing is profits have exponentially increased. That is the first thing that you need to keep in mind. Debt is unchanged. You did not borrow anything extra. So students, let's work on this. So I will write down here the company is doing well, is doing well with the finance they have invested, with the finance they have utilized, with the finance they have what students utilized. Because we can understand that the company is doing well with the finance based on the statistics, based on the stats, because they are financially doing very well. Students, do you agree with that application? Students, yes or no? Are you clear with that number crunching? Students, are you clear with that application? They are students waiting for your response, because the company is doing very well with this money they have getting. So any questions you have, you can ask me, students. But effectively now they are fine. Students, again, the main success of this is digital transformation only. So before moving forward, any questions you can ask me, students. If you are fine with that, can we move on to the next one? If you do not mind, yes or no? Yeah, is it okay? Thank you, students. Thank you very much. So students, now coming to the next one, there is something called asset asset utilization, asset utilization ratio. Now it's useful for manufacturing businesses. The main reason is, students, they have factories, correct? So we have one factory which has a warehouse as well, and 10 kilometers away we have our distribution center. So see, students, now today when we are talking in the class, you are feeling like you are working in a trade Cushy. You know the business very well. So students, asset utilization ratio. Now, if you do not mind, what is the ratio is sales, okay, sales. So it's another term is asset turnover also we say asset turnover. Turnover means all language, it's sales, asset turnover ratios. So sales divided by capital employed. Now same ratios only, capital employed. Why we take capital employed instead of asset means I'll tell you. Now assets can be depreciated. So when the assets are old, it becomes depreciated. Sales will be continuing. So more than the asset value, it's always better to go with capital employed value. The main reason is capital employed value are generally up-to-date value. Now, students, if you see your GLA university, your classroom, what you are sitting, I don't think it's a modern classroom. It would have been developed around 5 years ago. Do you agree with me, students? Yes or no? I don't know whether am I right or wrong, but as per my understanding, your class should be minimum 5 years old, if I'm not mistaken. Thank you very much, students. Thank you very much, students. But if you see the money what GLA has is up to date money, correct? No, students. So that is the reason we go with the capital employed. That is the logic behind that. But in schools, you would have studied asset turnover means sales divided by the assets, but actually assets have a depreciation. So that is the reason, students, we do not take this into consideration. That is the reason, students, that we do not take this into consideration. Before moving forward, students, any questions you have, you can ask me. If you are fine with this application, can I quickly get a double Y in the chat box? Double Y in the chat box, because it is something new, students. This is something new that you may be getting, that the logic makes a major role in the examination. So coming forward, students, thank you very much. What we will do is let's work on this. So if you observe here, students, let's do the calculation. That is 67,740, and the capital employed, let's finish it off, students. So it's going to be 9,288 plus, if you observe here, students, 5,142. So again, I will complete the numbers first, students. So it's very easy, no, students. So 59,120, and I'll take out the capital employed as well. That is the total equity and total debt. That is 7,226 plus, I will write down here, students, 5,033. So students, let's complete this first so that it gives you a better understanding, and it is represented in times. So 67,740, 9288 plus 512. So if you observe in this application, students, it's going to give you 4.69 times, if I'm not mistaken, because your sales multiplication factor is very high compared with your asset factor. So once again, students, 59,120, 7,226 plus 5033, it's again going to give you an answer factor of 4.82 times, students. Can you please observe this and can you just give me a confirmation whether it's right or wrong, students? Because this is very important at the moment. Can you just let me know whether it is right or wrong? There is a slight reduction. I will tell you why. Because the retained earnings has increased. That is the main reason for the reduction. But students, 4 times, that means your factory is giving you sales 4 times than you expected. So one thing, students, if you see seasonal demand, can you tell me when are the seasonal demand taking place, students? Can you please use the chat box? When is the seasonal demand? Can you quickly tell me, student? In the chat box, there are 2 seasons, students. 2 seasons we have. Can you quickly write the seasons in the chat box, students? What are the 2 seasons we have the highest demand? Because that is critically important as a finance officer. So one is October to December and the other one is April to June. So I'll write down here, students. So October, November, December, April, May, June. 6 months season, 6 months off season. So students get that point of view. 6 months it's going. So let's work on this for your understanding. So I'll write down here. The company is managing the asset resources well, and the main reason for the growth can be the seasonal demand, and also during off season, during what, students? During off season, the company may use systems such as app for, I can write down here as warehouse sale, or I can say here as bulk sale. They can do that. No, students, you would have seen, right, in applications they have bulk sales. In simple language they say we are selling, and they will sell it, students. So bulk sales they would have easily got using this. So frankly speaking, numbers are healthy. The numbers are healthy, students. So these are the returns. Actually we are done with the complete return basis of the ratios at the moment. Before we move forward, students, I just want to ask you a question. Any doubts, any issues you have, you can ask me. But do you see, students, the ROC is perfect? Do you see, students, the asset turnover is also perfect? So if you see turnover and ROC, returns, profit margins, all are returns. So the effective conclusion, once again, students, exploitation, I'll specifically use the term exploitation of digital platform. So I'll write down here, students, exploitation of digital platforms, exploitation of digital platforms, at exploitation of digital platforms, doing well in the development of the sales and efficiencies. So I will give you a practical example as well. Students, you may be knowing HRX, right? This brand is there, right? HRX, Hrithik Roshan's brand, is an Indian. It's an Indian brand. It's an Indian brand where students, what happened? Where the development was targeting online users. Was targeting whom, students? Targeting online users. Students, do you agree with me? Yes or no? So that's how, students, HRX brand became a strong brand in India, because still youngsters generally go for this brand as well. Do you agree with that, students? Yes or no? Students, any questions on the returns, you can ask me. We have completely done with the returns ratios. We have completely done with all the returns ratio. Any questions you do have, can you please let me know, students? If you are fine with that, students, can I quickly get a Y in the chat box, students? If you are fine with that, can I quickly get a Y in the chat box? Because we are done with the complete application here, students. We are done with the complete application here. So thank you very much, students. Thank you very much, students. Thank you very much, students. So students, what we will do now, I'm going to come for the interest ratios, that is the gearing, everything. and the working capital ratios. So before we move forward with that, we can go for a small 5 minutes break, students. So I may take around 7 minutes break. So you can take your break as well. Thank you, students. Okay, students, so can I get a Y in the chat box if you can hear my voice? Thank you very much, students. Thank you very much. Thank you. Thank you. Now, students, coming to the next one, so that it will be even better for you to get the understanding. There is a ratio that we calculate called interest cover ratio. So I'll write down here interest cover ratio. It's very simple, students. That is profit before interest and tax. Another term is operating profit divided by the interest, finance cost. Now, students, the understanding of this is how much interest your company is eligible to pay from your profit. Now, I will show this with the number explanation. So if you look at here, students, our operating profit is 6,072. Now, if you see our interest is 390. So 6,072 divided by 390, that will give you an answer of 15.57 times. That means your company has the capability of paying 390 15 times compared with the profit you have. So this company is a trustworthy company in simple language, students. Students, are you getting that understanding of that? I believe so. So 3,125 divided by 390, that means in the previous year, let's see what has happened. 3,125 divided by 390, that's going to be 8.01 times. Meaning is, students, compared with the last year, now you can pay even better. The main reason is you doubled your profit and you did not borrow any extra money. Students, if you are getting that application, can I quickly get a Y in the chat box, students? If you can get that application, can I quickly get a Y in a chat box, please? So I will write down here, students, the application, because it's very important. The company is stable. The company is stable. They are having the affordability. They are having the affordability to pay the interest. They have the affordability to pay the interest. Therefore, it's good financial management. It's good financial management. So they have managed the finance very, very well, students. I believe that gives you a better understanding and an application there. So before moving forward, students, any questions you do have here, you can ask me. If you're fine with this explanation that has been mentioned, can I quickly get a Y in the chat box, students? Because your understanding matters a lot at the end of the day. Your understanding matters a lot at the end of the day. So can I get a Y in the chat box, students, if that is clear for you? Thank you very much, students, on that point of view. I believe that's good. So children, now coming to the next one, after the interest cover ratio, the next ratio we specifically say is the gearing ratio. So students, gearing ratio is very simple ratio. It's not tough, students. It's very simple. That is the debt divided by the debt plus equity. Debt divided by the debt plus equity. Now, in this case, students, what I have done is I have taken the lease also as a debt because it's a liability that is payable. So if you observe in this case, the total debt we have is 5,142. The equity we have here is that is 5,142 plus the equity, again like the capital employed, 9,288. So if you multiply that by 100, you will get the answer. So shall we do that, students? Yes. 5,142 divided by 5,142 plus 9,288. So effectively, you must get an answer somewhere closer to 35.63%. Students, can you confirm me whether you are getting that? Is that the correct answer? I think so, students. That should be the correct answer. And similarly, students, let's do it for the next year. 5,033 divided by, so I'll write down here divided by 5,033 plus 5,033 plus, I will write down here 7,226 into 100, 7,226 into 100. So students, shall we calculate it? Yes, we can do the calculation. It's not difficult. Let's finish it off, students. 5,033 divided by 5,033 plus 7,226 multiplied by 100, it is 41,000, sorry, 41.06%. Correct me if I'm wrong, students. Are you getting that answer, students? 41.06%. This is the answer that you are getting. So students, the interpretation wise. So I'll just want to give you a short note, but just let me know if that answer explanation was fine. So I'll write down here, generally, a company, a company should maintain a ratio less than 50%. Less than how many percent, students? Less than 50%. That is the ideal term at the moment. But before moving forward, students, any questions you have, you can ask me so that it will be clear. But just let me know, students, if you are fine with this, because it's again an important ratio that you need to keep in mind so that you get the application of this very clearly and very neatly, so that it will be even more easier for you to do the business application in detail. It will be even easier for you to do the business application in detail. So thank you very much, students. So what I will do here is I will write it down for you. So I'll write down here the gearing ratio. The gearing ratio is managed efficiently, because students, I'll tell you why efficiently, since during the period, there is no additional borrowing. There is no, what, students? Additional borrowing. Keep that in mind. You do not have any additional borrowing. During the period, there is no additional borrowing. Keep that in mind. And I will also continue further, we need to understand that the return earnings, that means the profit. Return earnings means profit. Okay, students. So I'll write down here return earnings, and within brackets I'll mention profits are increasing. What is happening, students? Are increasing. So this is the basic understanding at the moment, students, before you go forward. Any questions you have, you can ask me, students. If you are fine with that, can I quickly get a Y in the chat box, students? Get this application clearly as much as possible, students, because that is critically important, students. That is critically important. Thank you very much. So students, if you observe the ranges of the borrowing, that is the capital structure, what we will do is let's write a common conclusion for this. Because students, now if you see, the beauty of CIMA is you are a strategist, you are a finance person as well. You are doing both, students. Do you feel that? Because yesterday when we did the SWOT, we did the strategy analysis. But today when we are doing the financial element, you are doing the financial account, the CA, the chartered accountant's work here. When we do the costing, you will get the cost accountant and the management accountant work. So let's write down here, students. Overall, the capital structure, that is the proposition, of both debt and equity, both debt and equity are managed efficiently. What, students? Are managed efficiently. Students, are you getting this application, students? Yes or no? Overall, the capital structure, that is the proposition of both debt and equity, are managed efficiently. Are you getting that understanding there, students? Yes or no? Because here you are not too much borrowed also. If you make too much loan, also problem, students. So here it's a super management at the moment. And the sound reason is founders are managing the company. So I'll write down here, students, mainly because founders are managing the company. I don't know, students, whether you were experiencing Steve Jobs in your life, because he died in 2012, I think 2010 or 11. When Steve Jobs was operating Apple, it was a different type of company compared with now. So that's the power of a founder, students. Founder is always the best. So the next one, let's move out here, is current ratio. So current ratio is the liquidity. Let's see. That is the current assets divided by the current liability. Current assets divided by what, students? current assets divided by current liabilities, current assets divided by current liabilities. Children, shall we start doing the application? Yes, we can start working on the application, students. Current assets divided by current liability. Okay, so students, it's very simple. Now, if you say current asset, inventory, receivable, cash. So 13,412 is the total current asset. Current liability, if you see 8,630. So effectively, let's do the calculation. 13,412, 8,630. The answer here is 1.55 is to 1. So generally, students, it should be 2:1. That is the normal norm, but here it is 1.55 is to 1. So I'll just write down a small note. So generally the maintenance should be 2:1. That means your current asset should always be double your current liability. That is the good thing, but here it's 1.55. But still, I will come to that conclusion in detail. So 9,712 divided by, if you see the current liability, in that case, it is 7273. Students, I am taking this here. You may see here 8,630. I am highlighting, and here 7,000. So I believe that is visible for you. So let's do the calculation for these students, if you do not mind. 9,712, 7273. So students, if you do not mind, can you tell me it's 1.34 is to 1. Students, is it 1.34 is to 1? Can you confirm me whether is it the correct answer? Are you getting something closer to 1.34 is to 1? Students, are you getting something closer to 1.34 is to 1? If you're getting that answer, can I quickly get a Y in the chat box, students? So I will write down here the current ratio. Thank you, students. Thank you very much. Thank you very much. The current ratio is below the market, standard, but it's okay. But it's fine. Since we have digital platforms, students. We have digital platforms. So in other language, it's okay. And also, students, if you see, there is a tax liability of 1,620 and 820. So I'll write down here the tax liability does not belong to operation, it is management. It is a legal statute. It's a legal aspect, because paying tax is legal statute. It's a legal statute. So students, even if you take out the tax and see, effectively, students, operationally you are strong, because tax anyway is something that you can control, you can't control. So that is the basic point of view there, students. So after current and the current ratio, the next ratio we are going to write down is quick ratio. So the next one I'll mention here is quick ratio. So students, quick ratio is a very simple thing. That is current asset minus the inventory, because you need to take out the inventory divided by the current liabilities, current assets divided by the minus inventory. Because students, if you generally see, inventories are slow moving, because generally, if you see it now, even if you see our business, our inventories move very well during our seasons, April to June and October to December. So if you see, sometimes in between the year, there may be off season as well. So that's the reason we take it out. So let's work on that, students, the current ratio. So I'm taking 13,412 as usual. That is the current asset. Of that, students, I am deducting the inventory, which is 8,580. And what I'm going to do is I'm going to take 8,630. So we can do this, students. It's not so complicated. 13,412, 8,580 divided by 8,630. So the correct answer you need to get is 0.56:1, 0.56:1. But students, I'll write down here one small point. General norm, general norm is 1:1. It should be tallying, but actually here it's even less than 1. That means suddenly if someone asks you to pay back your liabilities, current liabilities, you are having a shortage because your inventories are having more tied up with assets. So that is the point of view here. So let's do it for the next one. 9,712. And of that, students, what I'm going to do is I'm going to take out the inventory out, which is 8,420, and I'm going to divide it by the current liabilities, which is 7,273. So let's get the answer for that. It's not so difficult. 9,712, 8,420 divided by 8,420. So the answer is, it's going to give you something different. So in this case, it's giving you an answer 9,820, and it should be divided by 7,273. 7,273. So effectively, it's giving you an answer of 0.18:1. So again, students, even in this case, I feel the inventory stock out is very high, students, if you observe. So I will write down here. But the thing is, we are having seasonal demand. So we need to store inventory as well. So I'll write down here. The inventory stocking is higher. The inventory stocking is higher. The inventory stocking is higher. So students, in the examination, they can ask you the following theory. Students, by any chance, have you heard something called EOQ? Students heard about something called EOQ, students? Just asking. EOQ, by any chance? Inventory stocking is higher, EOQ. You'd have heard this, students, EOQ. What does EOQ stands for, students? EOQ stands for? You'd have studied this, students, for sure. EOQ, by any chance? Because exam, they may ask you to do a small evaluation of EOQ. I'm getting the answer, economic order quantity. Very good. EOQ, higher economic order quantity, economic order quantity. So I'll write down here economic order quantity, students, economic order quantity, because I don't think currently they do have an economic order quantity at the moment. This needs to be considered. This needs to be considered. This needs to be considered, because I generally feel this is the major area, students, because working capital management is one of the key areas in the examination. So thank you very much, students. I believe that is fine. So students, we are done with the current ratios and the quick ratios on this. So let's come to a conclusion before we go on to the working capital ratios. So I'll just write down a small conclusion for you. So I will merge this, students. I will merge this. So in this conclusion, I will write down a small point of view so that it will be easy for you. The inventory management can be improved. What do you think, students? Yes or no? Can be improved and be more efficient. Can be more efficient. Can be more efficient, provided the use of IT, because we can use the IC, the use, provided the use of IT, information technology. Agree, no, students? Yes or no? So get this aspect very clearly if you're fine with that. So any questions you do have, you can ask me, students. If you're okay with this, can I quickly get a Y in the chat box, students? If you're okay with this, can I quickly get a Y in the chat box, students, if you're fine with this? Thank you. Thank you very much. Thank you very much. Thank you very much. Thank you very much, students. So the next thing what I am going to do after this, what we will do next is, it's not a difficult one. Let's go for the working capital ratio, students. It's an important one. So I want to give you a 5 minutes break. You can go for a 5 minutes break, students. Students, I'm back to the class. If you do not mind, can you confirm me if you can hear me? Thank you very much, students. Thank you very much. So the first thing let's do is inventory days. Inventory days. So it's the number of days that you take to transfer your inventory from your warehouse to the seller. It can be on a credit term, so it can be on a cash term, but how many days it's there in your warehouse. So it's very simple to calculate, students. What we generally do is closing inventory, because generally average inventory days say, but for this purpose, let's take closing inventory divided by cost of sales into 365 days. Get that point of view, students. It is 365 days because it's inventory days. Students, can I quickly get a Y in the chat box if you are clear with that 365 days mentioning? Days mentioning. Thank you very much, students. Thank you very much. Thank you very much on that. Okay, now students, let's work on the inventory days. So if you see 8,580 divided by the cost of sales. So students, we can take the cost of sales from this, that is 32,515 multiplied, 32,515 multiplied by 365. So let's do it, students. It's not so complicated. It's just a basic application only. So it's not a difficulty. So let's work on that, students. So 8,580 divided by 3,515 multiplied by 365. Effectively, this is going to give you an interest, if I'm not mistaken, an inventory day of 96.31. So whenever you get a decimal point, you make it round up. Days, no, students, days. 96.3 means it's on the 97th day, because already it's going on. We are not on 1st January. We are almost in the 2nd January only. If I'm not mistaken, half of the 1st January is over. Okay, so the next one, students, if you see the closing inventory once again, let's look at that, students. 8,420 divided by, if you do not mind, quickly see the cost of sales, that is 28,970. 28,970 multiplied by 365. Let's do the calculation, students. 8,420 28,970 into 365. I believe that is giving you an answer of 106 days. Correct me if I'm wrong, students. Yes or no? 106 days. So I can say, students, shoe industry. So see, students, 3 months. You see here our industry analysis. So October to which month, students? December. Then January, February, March. 3 months inventory should be in the warehouse. Then again season coming. So can I say that this is more related to our seasonal demand? Students, you get what I'm saying. Seasonal demand is depicted in this. Seasonal demand is depicted in this. I'll show you that, students. Since we have seasons, once in a gap of 3 months. Once in a gap of how many months, students? 3 months. Students, now are you getting that understanding, students? Can I quickly get a Y in the chat box if you got that understanding, students? Because you see, right, we observed it very carefully. November, December, that time season is fast. Then you have off season also. But during off season, you need to keep it in the warehouse because you need to push that out when the season comes in. So that's good. Then we have the receivable days. So receivable days means credit customers, students. The customers for whom you have given on credit, how many days they are taking time to pay you. So I'll write down here receivables divided by receivables. So I'll write down here, students, receivables divided by sales, because generally it should be credit sales, but if they won't give it, it's sales into 365 days. So children, let's start doing the application so that it gives you the better understanding and the clarity as well. So coming into these students, if you see the receivables, they have mentioned other receivables only 518. And let's quickly go and see the sales. We already know it. That is 67,740 into, if I'm not mistaken, 365. So let's work on the students. 518, 518, 518, 67,740 into 365. So effectively, students, how many days is the period? I think it is only 3 days, right? If I'm not mistaken. And similarly, students, let's do it for the next one as well. It's not a difficult one. It's basically 490 divided by, students. If you see 59,120 into 365, that's again effectively giving you 3 days. So I'll just do it. 490 divided by 59,120 into 365. So it's again giving you somewhere around 3 days. Students, are you getting that application properly, students? So in this case, what we can write down, it's a very simple understanding. This is mainly because of online sales. Because of what, students? Online sales. Since the consumer takes 3 days, 3 days, or I can say since the online payment gateway, because you won't get the money immediately. Gateway takes 3 days to transfer funds, to transfer funds. Students, are you getting that understanding, students? Because of, students, so frankly speaking, their receivable periods are good. Why? I'll tell you. Because do they sell it through third party? Now, can you check the pre-scene? Do they sell their products through third party, or everything is through their online store? And one more reason is sales channels belong to them. Sales channel belong to them. Do you agree with that, students? Yes or no? Belong to them. They have their own retail outlet. They have their own website online store, and they have their own mobile application as well. So students, are you getting that understanding there? Is that clear for you, students? Can I quickly get a Y in the chat box, students, if that was clear for you? Because get that application as much as clear for you, students, as much as clear for you, because that is critically important there, students. Are you getting that understanding, students? Because see, this was a pure application, students. This is technical. Black color is technical, but office wise, you need to have the red color line, students. Very critical, because only a person who knows the industry will be able to respond this properly. Okay, cash cycle. Cash cycle is the addition of inventory and receivable. So we will get 100 days cash to get money. Will take 100 days and 109 days. So I'll write down here, students, the time taken for money collection, the total time taken for money, total time taken to collect cash, is this cash cycle. Students, are you clear with the explanation of the inventory days and the receivable days and the cash cycle? Are you clear with that, students? Are you clear with the inventory days, receivable days, and the cash cycle? Are you fine with that, students? Because that is critically important for you all to get that basement stronger. Thank you very much, students. Thank you very much. Thank you very much. Okay, so students, coming to the next one that we say as payable days. Payable days. So let's come to that, students. That is closing payables, because customers are closing payables divided by cost of sales. Actually, it should be credit purchase, but in most of the cases, it's cost of sales multiplied by 365 days, multiplied by 365 days. So students, let's start doing it, students. It's not so difficult. So trade payables, let's start working on that, students. 6,912 divided by cost of sales. Students, quickly look at the cost of sales, 32,515, and multiply that by how much? 365. So let's work out, students. 6,912, 32,515 into 365. That's effectively giving you an answer of 78 days. 78 days. And students, coming to the next one also, if you generally see, so let's come to this one also, students. So here the trade payables is 6,380, and I'm going to divide that 6,380 by the cost of sales figure, that is 28,970 multiplied by 365. So shall we work on that? 6380 to 8,970 into 365. Effectively, that's going to give you 80 days. So students, if you see one thing, students, you see one problem we have here. Now, if you see, it was clearly mentioned one thing, just for your point of view. Trade Cushy takes 30 to 60 days only to pay. Students, can I quickly get a Y in the chat box if you can see this area in the pre-seen material? Students, can I quickly get a Y in the chat box if you can see this one? Yes. Now they are taking more time than what it is for. So I feel ethically that is wrong, students, because it's not nice to delay once you give a promise. Correct, no, students, if I'm not mistaken? Yeah. So I will write down here, students, the time period is more than what is mentioned in the pre-scene, more than what is mentioned in the pre-scene. Get that application very carefully, students. Mentioned in the pre-scene, more than what is mentioned in the pre-scene, more than what is mentioned in the pre-scene. So I believe that is clear for you all. I believe that is clear for you all. If I'm not problem with that. So I believe that is clear for you all. So students, the next thing what I wanted to make sure is, after that, what we need to do is we need to do something called the working capital cycle. The working capital cycle. So here it's 22 days. That means for 22 days you are out of cash. You get the point of view, because cash cycle, or you can inventory days plus receivable days minus payable days, gives you the working capital. So 22 days you don't have money. And if you see here, students, it's effectively 29 days you do not have money. So if you critically observe, students, there is a cash shortage. 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 Get that point of view very clearly. There is a cash shortage due to poor inventory management, and payable management. Because receivable is excellent, poor inventory management and payable management. Why receivable is excellent? Because students, you have online faster you get money, students, no bad debt anything. Students, are you clear with this working capital management explanation that has been mentioned here, students? Are you clear with that, students? Is that fine for you in that working capital explanation? Thank you very much. So students, one thing we can do is, students, let's just write down an overall conclusion before we go on to the other aspects as well. So I'll write down an overall conclusion. The working capital management needs to be considered on the inventory management. On what, students? On the inventory management. Since it is very much critical. What, students? Critical. Very much critical. Get that point of view very, very clearly. Since the company is having poor management of inventory, instead they can apply EOQ. Can you remember economic order quantity? Then you have something called consignment. They can't do it because they have their own own store. Yes, but that also is possible. Consignment means you directly send to the retail store without taking money. Don't keep it in the warehouse. That is also possible. And the other one, students, I can say is we have a theory. After EOQ, we have this consignment stock. So I believe that is a good thing, students. Okay, so it's something that we can consider. So I believe any questions you do have, you can ask me. If you're fine with that, can I quickly get a Y in the chat box, students, so that we can just do the EPS calculation, earnings per share, how much you get per share. So any questions you have, you can ask me. If you're fine with that, can I quickly get a Y in the chat box, students? Can I quickly get a Y in the chat box? Thank you very much, students. Thank you very much. So let's come to the application now. It's not so difficult, students. So let's write down here earnings per share, earnings per share, earnings per share. That is very simple. Net profit, that means profit for the year. This is a basic earning per share divided by number of shares, divided by what, students? Number of shares. Students, I believe that is fine for you. So 4062, I'm taking the net profit, 1930. I believe that is clear. Number of shares, very simple, students. $1 equity share means, if you see 100 divided by 100, students, because $1 means 1 million divided by 1 is 1 million. So workings in millions, dollars, $3. So see, it's in dollars. So you divide it by 100. And here also, students, what I will do is I will divide this by also 100. So students, here you will get something called 40.62 per share. And here it is going to be 19.30 per share. So I will write down here, students, the EPS is very high, is very high, is very high due to the performance, due to the performance of the business, performance of the business, especially the mobile app, especially the mobile app, especially the mobile app. Students, how many of you all were aware about a mobile phone company called OnePlus? Students, when OnePlus started, they started digitally only. They didn't come to retail stores, if you can remember that, OnePlus company. Slowly, when they get the referrals and the numbers, then only they started moving forward. Students, the next one I'm going to have is something called dividend per share. Dividend per share. So let's calculate that. Only for 1 year we can do that, students. So where I'm going to take the dividend? Here. Students, dividend paid is 2000. So I am getting that from the cash flow statement. I'm going to divide it by 100. So in this case, it's going to be 20. Only this we can get. So I'll write down here. The company pays, had paid 50% profit as dividend. So that is the point of view here. So the students, you see 40 is the profit per share, 20 is the dividend. So from 40 you pay 20 as dividend. So that is the understanding there. So any questions you have, you can ask me, students. We are done with the full ratio, then we will do the cash flow statement also. It's a small area, but before moving forward, any questions you have, you can ask me, students. Any questions you have, you can ask me. But it's a very good financial statement. So property plant is there. You see there is a fall in the property plant. I think mainly because, students, there may be situation of disposal. We need to check and see. Right to use the asset, that means leased asset, is increasing. I think distribution vehicles, inventory, other receivable, cash is very high. Students, cash is very high. So we need to go through the cash management, Miller model, Baumol model. There are some areas from F2. You don't worry, we will learn that as well. Then the equity shares, return earnings is going up, borrowings are fixed, lease liability, tax, and again lease. Students, any questions? You can ask me. Any questions for the day? Before we go to the cash flow, students, any questions? If you do not have any questions, you can put a Y in the chat box, students. If you do not have any questions, you can please put Y in the chat box. You can please put Y in the chat box. Thank you. Students, now let's look at the cash flow statement. Profit before tax, 5,682. If you see, students, I'll just show it to you. Here, 5,682 they have taken in the profit before tax. A depreciation of property, plant, and equipment, 1,640. It's a bigger depreciation. I see here profit on sale. They have disposed some property, plant, and equipment. Depreciation of right to use asset, that is the lease asset, and the finance cost they have added. So increase in inventory, receivable, and trade payable, that's fine. And students, cash generated from operation, tax paid, interest paid is same amount. You are not accruing anything. You have purchased property, plant and equipment, and you have sold as well. So what has happened is there is a net cost here if you have to see. So my question here is, students, if you have purchased, why here it's going down? Because of the heavy depreciation, because we have a huge depreciation because new assets we would have purchased. Machineries, palleting, can you remember that, students? Retail stores, can you remember we started new retail stores? So we should have purchase equipments, monitors, everything. That is the reason. Dividend paid, lease principal paid. So there's a net increase in the cash equivalent of 3,512 for the current year, which is a significant amount, students. So before going through the budget, students, you must go through the budgeting. I want to give you a small assessment, so you can just write down, students. So you have the budget, because budget I will be doing mostly on the Monday class. So you need to recall basics. You need to study what is contribution. Students, can you tell me what is contribution, students? Contribution is what, students? Can you tell me what is contribution? A small recap. What is contribution? Anyone in the class, can you quickly put a chat in the chat box? What is contribution? Waiting for your answers. Waiting for your answers, students. What is contribution? What is contribution? Waiting for your answers. Waiting for your answers, please. Excellent. I am getting 3 answers. Excellent. So contribution, fixed cost plus profit. Ayo, fixed cost plus profit. Yes, it is contribution. Yes, it is contribution, but the correct one is selling price minus variable cost. Selling price minus variable cost. That means, students, controllable profit you have. Variable cost is controllable, selling price is controllable, fixed cost, no, agreement, long term. Very good, contribution. Students, the next question is break-even point. Students, what is break-even point? You can tell me the formula or even your note. Break-even point, because these are very important, students. Can you quickly tell me, students, what is break-even point in your understanding, please? Waiting for your response, students. What is break-even points? I'm getting some answers. Excellent, students. No profit, no loss. Excellent. When the profit equals to, or I can say, when the contribution equals the fixed cost, that means your contribution is covering up all your fixed costs. You don't make a profit, either you don't make a loss. That's the correct answer. So students, if you do not mind, excellent. I have got the answer. Thank you very much, Bhumi. So the answer here is fixed cost divided by contribution per unit. That will give you the break-even units. That means this is a decision making, students. You need to know this before you decide any business. So contribution done, break-even point analysis is done. Margin of safety, students. Margin of safety, can someone tell me what is margin of safety, students? Margin of safety. Waiting for your response, students. Margin of safety. Waiting for your response, students. Margin of safety. Please, can I get the answer, please? Margin of safety. Profit after depreciation, break-even point, excellent. Profit after break-even point, good answer. Excellent. So I'll write down here, total production minus break-even units. Excellent knowledge. Students, what is adverse variance? Can someone tell me what is adverse variance? Please, in your language. I don't want any complication. In your language, what do you think about adverse variance? Negative difference. Excellent. So I'll write down here, expectation. So actual is underperform. When the actual is underperform, it is adverse variance. And favorable variance is actual overperform. Actual is what, students? Overperform. overperform, because students, cricketers, they sometimes give adverse results, they give favorable result as well. So get this understanding of this clearly, students. That is the basic idea. Excellent, 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 excellent. So students, I believe you are getting this core idea of the business. So students, what we can do is, I want to show you one document before we, because you're getting a holiday tomorrow, so you can do the printing arrangement as well. So students, just a minute. I want to teach you how to study so that it will be easy for you when you're doing the examinations as well. So just a minute, students.
So can you please scroll down this screen so that I can note?
Okay. Page number, last page.
Yes, sir.
Thank you. Okay, so students, one more question. Just you take it down. I'm just taking one important document. Okay, so students, just for your understanding, let's come into the picture. So students, this document is there in your portal, Google Classroom. This must be a printout for sure. This is how your syllabus is aligned. So these are the questions will come in your exam. So can I ask Deepansh? Deepansh, can you talk with me if possible, so that clarity will be even
Yeah,
better?
yes, sir. Yes, sir.
So Deepansh, this questions only will come in the exam. Okay. So
Okay,
now
sir.
example, we know our company Trade Cushy. So I can use appropriate technologies and gather data for costing purpose from digital and other sources for Ted Cushy. So what they will do is, now they will add one name, that is Trade Cushy, for Trade Cushy. Now that is the understanding that you need to have. Now why we study this is, now every company will have digital data, but Trade Cushy will be different. Are you getting what I'm saying there?
Yes, sir.
Deepak. So now they see here the code numbers. P1 is management accounting, then E1. So just want to make sure. 1 minute. So Deepansh, ready?
Yeah, yes, sir.
So in every study text, okay, Deepansh, what happens is, now if I have uploaded the study text as well, so I'll teach you how to use it. So every study
Yes, sir.
text will have a code language. Now chapters are not code. I'll teach you this is chapters, but code is this one, students. Do you see here, Deepansh? E1,
Yes, sir.
code A, B, C, D, E. Do you see that, Deepansh? A, B, C, D,
Yes,
E.
sir. Yes, sir.
So if you see for E1, I will do it and show. So they are specifically stating E1, C1 all, C2 all. Do you see there? C1 all,
Yes,
C2
sir.
all. So I will just highlight this, students. C1 all, C2 all. Now, if you see, C is data and information in digital world. Clear? So you need to understand, you need to go to the data and digital world. So they have given a table like this: E1A, E1B, and E1C. Now E1C, you have this, you get what I'm saying, Deepash. E1C, you have
Yes,
decision
sir.
making, understanding customer, ethics in data, like that it is there, data visualization, big data analysis. So these are the indicative topics. You should know the topics, but for detailed reference, what you need to do is, students, Deepash, are you following me? Yes or no?
Yes, sir.
So when you go to every chapter, now let's assume you get this table, you get what I'm saying. A1, A1, A, B, C. Do you get what I'm saying? Yes or no, Deepash? The beginning of the chapter. So this chapter is not related to C. We want C1. Are you clear? So according to the C chapter is chapter number 7. So I'll just take little time, little forward. So chapter number 7. So this is chapter number 7. So if you go to chapter number 7, Deepansh, you will be able to see in the beginning of that chapter.
Yes,
Do you
sir.
see C1? C1 data and finance, general usage of data, specific usage of data. So I'll just go to the core activity C1 and now see here chapter 7, general usage of data, specific usage of data. Now, can I ask one question, Deepansh? Now, can we use data in our shoe industry to make decision about new product development? Possible or not possible, Deepansh?
Possible.
Yes or no? Possible, no? So you need to revise this in this style, and you should be able to connect it to the business of the shoe industry. So students, can I get maximum possible wise in the chat box if you understand this? Everyone, if possible, can you put wise in the chat box if possible? Because students, if you get this, you will pass the exam. If you get this, you pass the exam. Only that I can say. If you understand this, you pass the exam. If you still do not understand this, don't worry, students. Don't worry, I will be able to guide you as well, students. So thank you, students. Only 4 Ys I have got until now. What about the rest of the people? No problem at all. So you get the understanding very properly. So students, thank you very much for your contribution on today's day. So let's meet up on the upcoming class on Tuesday. Have a wonderful weekend, students. Thanks a lot, students.
Thank you, sir.
Welcome.